Hi, and welcome to the latest episode in Optimum TV's Countdown-to-Conference mini-series. Today, I'm joined by Geraldine O'Keefe, partner at EQT.
Hi, Stephen. Nice to meet you this morning.
Thanks for joining us. So let's talk about the market so far in 2024. There was quite a lot of optimism at the turn of the year that markets were on the turn, that things were looking up. Has 2024 delivered so far?
I guess I would summarize the year so far as being dominated by cautious optimism. Like you say, everybody was hoping at least that 2024 would be a lot better than the preceding year or two. And I think it has delivered in that sense. But I think there's still a lot of cautiousness in the market, and investors are reticent about taking on new investments, I think. And it takes time. It'll take time, I think, for the trauma of the last few years to wash away. But we are seeing an uptick in deal making and deal flow, and I think that spurs the market on.
Okay, so what are your top three takeaways in terms of the market in general? Types of deals that are popular versus perhaps not quite so popular, and technologies that are hot and those that are not right now?
Yeah, let's start off maybe with the kind of markets and deals. I think on the venture side, I think there was definitely very much a pause in terms of the deal flow and acquisitions in the last couple of years. I think the acquirers were reticent about taking on new companies, but we've seen a real turnaround in that in this year. I think we've seen a really great uptick in the amount and quality and size of the venture deals and private companies being acquired by large pharma across the board, across deal types and technologies, which is great. In the public markets, deal flow has been dominated quite a lot by PIPE transactions. So that's, again, maybe the same investors re-upping into companies that they know already. Also, I think shows the cautiousness that a lot of deals are almost pre-baked before they go out to guarantee success. I think we've seen a couple of IPOs, very few. I think there's very few companies and deals that are going out on spec, so to speak, unless they are really guaranteed those deals are going to go to fruition, that that nobody's going out there yet. I did read an article the other day saying that the IPO window is open, but this is really across the board, across all different subsectors. I think for the biotech industry, it'll be still a relatively rare phenomenon this year to go for IPOs on NASDAQ or indeed in Europe. In terms of the type of deals, and I think we have seen a little bit of two different camps. We're getting pharma tends to be buying these earlier stage companies, or they're buying commercial stage. And there's a bit of a gap in the middle, and I think part of that has to do with the larger companies are also very conscious of their earnings or EPS, not wanting to impact their R&D budgets. So they can take on the earlier stage programs because it's not going to immediately ramp up their R&D spend. Or, of course, they're always interested in taking on acquiring companies that will be immediately accretive to their earnings. But the companies in the middle, maybe we have seen fewer, I believe, of those say that are phase 3 ready, or where the bigger companies are willing to take on that big spend immediately. So that's where I would see a bit of a gap in the market. Getting a lot of early stage deal flow and a lot of commercial deal flow, but more hesitant about taking on phase 3 ready assets where they have to incrementally add to R&D budgets immediately.
Okay, and in terms of technologies?
And in terms of technologies, I think the whole market has been dominated by talk about obesity. That's overriding. Everybody's focused on that, and of course, we've got these phenomenal blockbuster drugs for obesity for the first time. But then, of course, as usual, the market is looking to see, well, what's next? And I think that's dominated. Everybody's, scrambling around trying to find the next or something additive to the existing obesity drugs. Cell therapy, I think, has been relatively out of favor, after having a huge interest for a couple of years. The last year, I suppose, year and a half, they seem to have fallen a bit out of favor. Mainly, I think, because complexity of these therapies, is playing out as it often does. I think we always get a little bit too optimistic about how easy these products are going to be to get to patients. I think, they have been plagued, for want of a better word, with manufacturing issues. But I believe we're having a little bit of a turning point there. Adaptimmune getting the first TCR approved recently, Iovance also getting the first TIL approved this year. I do begin to feel that, there is, these are here to stay. And part of that, I think, is we're seeing pharma investing heavily in building up their manufacturing on that side. That also gives me confidence that we're going to see a resurgence of interest in these cell therapy companies. Orphan diseases, always of interest, of course. And I think another theme, and that's a pretty obvious one, is all the discussion around artificial intelligence, machine learning, and that intersection between healthcare and technology. That's an area where obviously we've been talking about it for a long time, and there's been a lot of good ideas. But I think we're beginning to see a lot of those good ideas now being converted into sustainable, real revenue generating companies and technologies. So I think that's an area that we're really going to see a lot more excitement in.
Okay, great. Before we cast our eyes forward to the next 12 months or so, just very recently, last week or two, there's been a pretty serious bout of turbulence in the public markets with big falls around the world. Now, turbulence is just a matter of fact when you're talking about public markets, but this fairly serious bout, does it have implications for biotech and medtech, both in terms of public and in terms of private investment?
I suppose we've been around long enough to see a lot of these bouts of turbulence, big ones and small ones, and ones that go on for a long time. It's part of the normal way of the markets. I don't think this particular bout of turbulence is something to be unduly worried about, but I do expect more. Let's look at what, the markets, and particularly the biotech markets, are always at the mercy of the larger, broader macroeconomic sentiment. And there's a huge amount of turbulence in the world at the moment, and I think that feeds through to the market, and is going to continue to feed through, certainly for the rest of the year, I would think. So I think maybe these bouts of turbulence are something we need to get used to.
Okay. And finally, briefly, if you think about mid-2025, are we going to be in a better place in terms of the life science market? Is it going to be much the same, or is it going to be worse?
I think, as I said, we still have a little bit of a hangover from the terrible markets from the 2021, 22. I think that's why we're being cautiously optimistic going into 24 now. And the further we get away from that boom and bust from those era, I think the more confident investors will be that we're back to kind of a new norm, and there's a little bit more stability. The thing about the healthcare sector is, it is still producing phenomenal new treatments to help patients, and that's what underpins this sector. So I do believe, there is value in the market. We've hopefully reached a new more stable norm going forward, and I think the further we get away from the turbulence of the past few years, the more confident investors will be in investing in the future of the sector.
Geraldine, Keith, thanks very much indeed for talking to Optimum TV.
Thanks, Stephen. Lovely to talk to you.
Bye-bye.
Bye.
For more Optimum TV episodes, please visit our website, optimumcomms.com, or our YouTube channel at OptimumComms. Thanks for watching.